With us this morning is Seth Merrin, CEO of Liquidnet, the biggest firm in the business of electronically matching buyers and sellers of large blocks of stock. Seth, you own a few computers. Are you responsible for all the market volatility?
No, our clients represent, are the 650 of the largest asset managers in the world. They are not the high-frequency traders.
I was being a little facetious, but you do have a window into this world of electronic trading by virtue of what Liquidnet does. What are you seeing? What's happening? Is Gary Wedbush right? Are high-frequency trades accounting for 75–80% of this extraordinary volume we've seen in August?
I believe that they are. High-frequency traders live on this kind of volatility. And unfortunately, the institutions, what we're seeing is the macro events are forcing the market down, but we're not seeing the panic selling that we saw in 2008. Liquidnet's volume has doubled in August as well. And what they're doing is they're seeking the safe haven of an institutional marketplace to get away from the high-frequency traders. Liquidnet does not cater to the high-frequency traders.
Right.
And any time that the institution goes into the marketplace with forced selling from redemptions, for instance, it creates a supply-demand imbalance that the high-frequency traders take advantage of. That forces the volatility in the market.
So just out of curiosity, which sectors are you seeing the most volatility in?
Well, the volatility is really coming, and high-frequency trading is playing in the top 10 most volume-specific stocks in the marketplace. Our clients are really trading the small and the mid-cap stocks in our marketplace, and that's not really where the high-frequency traders live. We're seeing bearish sentiment across the board, except for two sectors, and that's utilities, which is a defensive play, but also IT. And you can see that the technology companies have been reporting very good.
So these are the ones that the long funds are basically just trading the most?
Well, you can't say that they're trading the most. That's where they're buying. Virtually across the board, we're seeing lots of sells in every other sectors.
Seth, have we gotten to the point now where we can use August as a case example for perhaps why high-frequency trading isn't living up to the billing of its sponsors? It's supposed to cushion the market from some volatility. It's supposed to be there with a bid the way that, let's say, the specialist ones were. This is what we've heard over the past couple of years. It doesn't seem to be playing out that way, does it?
It's not. That's a common misperception. High-frequency traders are not the new market makers. They're not responsible for making an orderly market. What they do is they take advantage of urgent selling or urgent buying. And their computers listen for that type of urgency, and then they go in and they trade ahead of it. So that's why you see the volumes in the markets double. That's why you see the swings of 400 to 500 points per day. It's not the institutions that are creating that kind of volatility.
Is it a bad thing at the end of the day? I mean, it feels bad when you see the Dow go up 400 points, down 500 points, up 400 points the following day. Is it bad, though?
To me, I think it's clearly bad, and to the institutions as well. And for all of the retail investors out there that put their money in with the institutions, there's no fundamental reason why the market should go up 500 points one day and down 400 points the next day.
Is there any indication that this kind of volatility, just from what you've personally seen in the past, means that we're close to a bottom, close to establishing a bottom, or is it impossible to draw that kind of conclusion?
Well, that's a great question, because what we've seen in the past, anytime we've seen this level of bearish sentiment among our members, it's led to a sharp increase in the markets over the next 6-month period. 17% in 2010, 30% in 2009. So in our marketplace, there's conviction on both sides of the market, and some folks are going to make out tremendously in this volatility.
Well, yes, somebody is going to do well, that is for certain. Seth, great to see you here on the Inside Track. Seth Merrin, the CEO of Liquidnet.